A lot of corporate news to get to, but Jim, just a macro view of the market as we look at what the Dow's done over the past 24 hours. You know, a lot of commentary from some traders saying yesterday, at least in the bond market, was the craziest day of trading they've seen outside of crisis days in a long time. You feel that way?
Yes. I've got to tell you that the panic that went through many stocks, let's take NVIDIA. I thought NVIDIA was one of the best quarters. They far exceeded everything, particularly in data center. And the stock went down almost 10%. And why? Well, I had Jensen Huang. You know, I think he's brilliant. But it was the bond market. The bond market was the villain. Salesforce, bond market villain. I mean, it was almost as if it didn't matter what you had to say and how good. What mattered was the 10-year, the 7-year. David, at one point, the 5-year was crushing a lot of good stocks.
Yeah, well, listen, it's growth stocks, and growth stocks with yields moving higher were the ones, and have been, by the way, not just yesterday, Jim, but for a period of weeks now, getting hit, losing ground, as hard as it is to imagine, actually going down. As you look at, we're at 146, but we hit what, 161, I think yesterday was our high in yield on the 10-year. Meanwhile, the banks obviously are beneficiaries, and they've been quite strong over that period, as we pointed out many times.
Isn't it time that ran its course?
Well, that was my question to you. Is it?
I think it is. My Chapel Trust sold some of these. I mean, really, if you're going to have inflation, you can't hide in the banks. They don't. It doesn't work. Yes, it can work for Jay Farner and Rocket Mortgage.
Right.
But at a certain point, if you really want to extrapolate things, I mean, business will dry up. I mean, that's what's supposed to happen.
And when does this rotation out of growth stocks, or at least slow down or reverse? If
we use the December of 2015 to Feb 2nd paranoid, really, I think that is the great analog, because you had a rate hike. You have another month where people are skittish about these stocks, particularly, David, the companies that say, you know what, we don't care how much we spend, we're growing. That works so great when rates are going lower, but people just despise it when rates are going higher. It's the common thread of the companies that are really getting crushed here.
Yeah. And, of course, I mean, Carl, we always want to put it in perspective. We look at 146 at 7. You know,
I know.
We all remember a time during the last, boom, of course, which we referred to many times in the late 90s, Carl. You can remember where rates were then. They were multiples higher than they are now. But to put it in perspective, it's higher than we've been in a while.
A 30-year fixed, guys, is going to have a 3-handle before much longer. Of course, it was 265 back in, I think, the all-time low was 265, but it's the highest now that it's been since August. Jim, to follow on David's question, you know, names like Splunk and Peloton down 30-plus from the highs.
Right.
I mean, does the inverse of your financial thesis work? Do you buy them here?
I don't know. I mean, Kathy Wood's been selling Splunk. She seems to sell it. She has some sort of printing press of Splunk. It seems to go by every day. Kathy Wood being the premier growth investor of this moment. Look, I think that we're going to get oversold, and you have to start looking at value. But you know what value is now? Value is something like Apple, which has come down furiously. It's like Facebook. It's just come down horribly. And the businesses, I mean, Twitter is having a good quarter, and people are just saying, listen, I can't touch Facebook. Facebook's very cheap. David, by the way, you'll probably want to know, I got a 3.5 floating yesterday.
I heard you mention that on Squawk. 3.5 floating?
Well, 5-year average.
Okay,
5-year
got it.
arm. But
right.
You know what? 2 weeks ago was the same rate. So let's not panic. If you're trying to divine the Toll Brothers quarter, it's not going to impact. Jay Farner this morning, not going to impact. So I think your original issue about 1.6, where things are, let's keep things in perspective. The rates are not moving nearly as much as you would expect yet, because I think that the mortgage people just don't believe in it.
Interesting. And the mortgage market has its own, mortgage-backed securities. There's different things that affect it, not just the overall rate. As anybody who's sort of looked and said, hey, can I lock in lower now? And they're like, no, sorry.
No,
it also has to do with demand at certain
But demand is so strong, David. Yeah. It's so strong.
Shepard Smith here. Thanks for watching CNBC on YouTube.